Welcome back to Explain the Charts, everyone, for our in-depth analysis of Meta platforms, ticker Meta. Today, July 22nd, 2025, we're diving deep into the latest news and charting data to uncover potential opportunities and risks for this tech giant. First, let's look at the current events shaping Meta's landscape. Google search results indicate a significantly positive sentiment around Meta stock right now. Several prominent analysts, including KeyBank, Stifel, and Bernstein, have recently raised their price targets and reaffirmed buy ratings. Stifel, for instance, dramatically increased its target from $655 to an impressive $845. KeyBank now eyes $800, and Bernstein lifted its target to $775. This strong analyst optimism is largely attributed to Meta's aggressive advancements in artificial intelligence. AI initiatives are seen as the primary driver for future growth, especially in advertising, which remains Meta's core revenue engine. Furthermore, Meta is expanding its infrastructure, with Enbridge announcing a 600-megawatt solar project to support Meta's data center operations. On a slight downside, Meta is reportedly appealing Italy's VAT claim, alongside other tech giants, which signals minor regulatory hurdles. A critical upcoming event is Meta's second quarter earnings report, scheduled for July 30th. This report will be a significant catalyst, potentially confirming or challenging the current bullish analyst sentiment. Now, let's turn our attention to the charts, starting with the daily time frame to grasp the broader market movements for Meta. Looking at the one-day chart spanning from March 2024 to present, we can observe a clear and sustained long-term uptrend. The stock has climbed from roughly $480 in early March 2024 to its current level near $713. This upward momentum strongly correlates with the analyst sentiment we just discussed, particularly the focus on Meta's AI growth story. However, this journey hasn't been without significant pullbacks, highlighting inherent volatility. We can identify several key support and resistance levels on this longer time frame. A very strong long-term support zone formed around the $415 to $420 level following a sharp correction in late April 2024. Let's narrow our focus to that particular period, specifically from April 22nd to April 27th, 2024. Here, on the one-day chart, we see a dramatic drop where Meta fell from approximately $496 on April 23rd to $441 on April 25th, an almost 11% decline in a single day, preceded by another significant drop. This sharp reversal was accompanied by extremely high volume, notably 82.8 million shares on April 25th, indicating strong selling pressure, likely triggered by earnings reactions or major news at that time. Subsequently, we saw a bounce off the $414.50 low, confirming this as a significant support level. Moving back to the full one-day view, other intermediate support levels emerged around the $460 to $465 range, observed in mid-July 2024 and again in early March 2025. Resistance levels have been steadily broken, with price pushing through $500, $550, $600, and $650 thresholds throughout 2024 and early 2025. The current trading range suggests resistance around the $730 to $737 mark, which represents the recent high observed in late June to early July 2025. Now, let's zoom into the one-hour chart to examine the short-term price action, specifically from early July 2025 to mid-July 2025. On this hourly view, we clearly see the push towards the recent high of around $737 in early July, followed by a noticeable pullback. A key observation is the drop from the $725 level on July 15th, swiftly moving down to the $700 to $705 range by July 16th. This recent decline suggests some profit-taking or short-term bearish sentiment following the rally, but it is still within the broader bullish context. The $700 to $705 area appears to be acting as immediate support on this hourly time frame. Any sustained break below this level could signal further short-term weakness towards the $690 or even $680 region. Let's go even more granular and examine the 15-minute chart, covering the most recent trading days from July 17th to July 21st, 2025. Here, we can see the immediate reactions to price movements and identify very short-term trading opportunities. Notice how on July 17th, the price dipped from around $706 to approximately $693. This intraday low found quick buying interest, leading to a rebound above $700 by July 18th. On July 21st, which is yesterday's trading session, Meta opened around $707.50 and showed impressive strength, climbing towards $714. The latter part of July 21st saw consolidation around the $712 to $714 level, indicating some stabilization and potential for continued upward movement. The current price of $712.965 as of the end of July 21st on the daily chart aligns perfectly with this 15-minute consolidation. This short-term strength right before market close on Monday, July 21st, gives a cautiously optimistic outlook going into Tuesday. So, what are the reasons to be bullish on Meta stock, both short-term and long-term? The overwhelming analyst consensus, with significantly raised price targets, paints a very positive long-term picture. Meta's strategic focus and investments in AI are perceived as strong fundamental drivers for sustained revenue and earnings growth. The upcoming Q2 earnings on July 30th, while a potential volatility trigger, could also serve as a powerful catalyst if results exceed expectations. Given the current price is well below even the lowest new analyst target of $775, there's considerable upside potential. For the short term, the recent bounce from the $690 to $700 zone on the 15-minute chart suggests immediate buying interest. However, there are also reasons to be cautious or bearish. Historically, Meta has experienced sharp pullbacks, as demonstrated by the significant drop in April 2024. High volatility around earnings reports is a common occurrence, and if Q2 results disappoint, we could see a strong negative reaction. The ongoing regulatory appeal in Italy, though minor, is a reminder of potential geopolitical and regulatory headwinds that can impact the stock. Additionally, a broader market correction could pull Meta down regardless of its individual performance. Let's recap the important price levels and what to look for when deciding when and what price to trade. On the downside, the immediate support level to watch is the $700 to $705 zone. A break below this would likely bring the stock down to the $690 and potentially the $680 levels, where further buying interest could emerge. Longer term, a significant support area remains around $460 to $465 and the critical historical low of $415 to $420. On the upside, the immediate resistance is the recent high around $730 to $737. A convincing break above $737 would signal renewed momentum, with the next targets being the analyst price targets of $775, $800, and potentially $845. An unbiased prediction is that a decisive move above $737 is quite likely, perhaps with a 70% probability, if the Q2 earnings report on July 30th shows strong growth in AI and advertising revenue. Conversely, a retest of the $700 to $690 support is also fairly likely, perhaps 60% probability, if earnings show any signs of slowdown or if the broader market experiences a correction. For traders, paying close attention to volume during these price movements is crucial. High volume on breakouts or breakdowns confirms the strength of the move. Keep a very close eye on the July 30th Q2 earnings announcement, as this will dictate the stock's direction in the immediate future. Also, monitor news related to Meta's AI initiatives, as continued positive developments will reinforce the bullish long-term outlook. That concludes our in-depth analysis of Meta stock for today. Make sure to subscribe to Explain the Charts for more detailed market insights and chart breakdowns.